Paying taxes is optional. It's what poor people decide to do in order for the government to support them. And here's the thing, if you want to be wealthy, then you got to do what wealthy people do. And wealthy people don't want to pay taxes. So they teach not only themselves, but also their family, and of course, their successors, how to avoid continuous taxation. In this video, I want to talk a little bit about how you can also learn strategies that I'll share with you and that I've taken advantage of to offset some of the taxation that you might have in your life, because every dollar that you don't pay in taxes is money that you can reinvest into your future, into your net worth, and into your family or into yourself. So let's go ahead and get into it. And the first thing I will say is this: if you want to live internationally, then there are so many options for you to avoid having to pay a continuous tax rate, especially when you're not living in the local jurisdiction that you are a citizen of. So for example, I'm a United States citizen and I have to pay global taxes against my income. But let's go into how that actually works, because for US citizens, it's very different than maybe other countries and how their tax process works. As a United States citizen, you have that global tax consequence. It is the most expensive passport that you can hold as a citizen of this world. And because of that, you do have the access to over 180 countries holding an American passport without having the need to get a visa. A nice visa on arrival, simplicity, you don't have to go through an embassy in order to get access to a certain country or hemisphere. That makes it really sweet. But is it worth spending a bunch of money in taxes if you were to go live in these countries, yet you don't actually live in the United States? In order for you to avoid having to pay this global tax, you need to structure your income properly. So I'll give you an example of what we've been able to do with our own income. So as a real estate investor, I own real estate that, of course, I have the ability to write off a lot of deductions against the income that the properties generate. Most real estate investors earn income through rents. That's where money is mostly coming from. And so like myself, I earn income through my rents. My rents are paid to me through an LLC. So my tenants deposit money into a property management LLC every single month. Most times they deposit the money either through a cashier's check or a money order, or they send it through a Zelle payment or an electronic transfer. Now, the electronic transfers are really easy because I get them right away. But the other payments, I need a physical property manager to go in and actually make those deposits for me, or I have to rely on the tenants to make those deposits for me as well. So this is where it kind of starts to get interesting. Once they make those deposits into this local LLC that's located in the state that these properties are being held in, I then transfer those funds offshore and into an entity that I own within a offshore jurisdiction. Now, this offshore jurisdiction could be located in the Bahamas, or it can be in Belize, or it can be in Caymans. It really doesn't matter so much. The one thing that does matter is that there is local tax exemption in that jurisdiction, and it has to be particular to foreign income. So when you go open up an LLC in Cayman or in Belize or in the Bahamas, you are getting a tax haven status on foreign income that's being generated by that business entity that you're opening up. So since I'm opening up a business within these jurisdictions, and that business is earning income outside of the Bahamas or that jurisdiction, since it's technically earning that income from the United States, that income is now tax-free. It doesn't have a taxable consequence because it's not earning the income inside of that country. That's a beautiful thing, because now you've exempted that income in that jurisdiction. And technically, that income has actually already been taxed at the local state level in the state that you own the assets and have the LLC receiving the rents. So in my situation, I have properties that are located in Florida. My property management LLC is also located in Florida. My tenants that sign leases with my property management company that manages all of the rents, they send those rents into this property management LLC's bank account. That bank account then wire transfers over, or ACH is over, whichever one is easier for your bank, but it sends it over to my Bahamian LLC. Now, this Bahamian LLC doesn't have a taxable consequence on that foreign income. So I can send as much money as I want into this account and not face any taxable consequence, which is really nice. At the local level, I do still have to pay taxes on that income in the state of Florida. However, because it's a business and the income is being generated from real estate, I can write off a lot of that income from the improvements I make on the property, a cost segregation that I do on the property's depreciation. I can take advantage of employees and the payments that I make to those employees. I can take advantage of interest that I pay towards loans under that LLC. I can even take advantage of any other potential improvements or investments that I make within my business, not just my property. So if I were to buy a truck or buy a trailer or buy tools or buy resources that can help my business operate better, I can also write a lot of those things off. So against the income that the properties are generating in this property management business, I'm writing all of these things off against that income on a yearly basis. And I'm also accelerating the depreciation on the asset against that income. So most, if not almost all of that income is already exempt from taxation because of the deductions. The remaining amounts that I receive from my rents are being sent almost as a profit to these offshore entities, in this case, to the Bahamas. When I send it to the Bahamas, I have a lease agreement established between the Bahamas LLC and my onshore Florida LLC. And this establishment, what it does is it justifies the transfer of funds between one entity to another. So basically, my Florida LLC is leasing from my Bahamian LLC. And so there is a payment that's being made for the Bahamian LLC to provide that lease and those terms around that lease to that Florida LLC. Now, a lease can be across pretty much anything that you want. It can be for location, it can be for materials, it can be for consulting services, supplies, basically whatever it is. But this income, since it's foreign, is not taxed in the local jurisdiction. So I have no income tax against that income in the Bahamas. Now, I establish myself as an employee of that Bahamian LLC, and I pay myself a salary from the Bahamian LLC to my personal name. And because I'm establishing this employment agreement between my business and myself, what I've essentially done is I've created a foreign income for myself personally. And the United States recognizes foreign income up to $126,000 in the year 2024 as an exempt amount of benefit to someone that lives outside of the United States for over 330 days. I live overseas. My permanent residence is overseas. And because it's offshore, I'm not using bridges or roads and any of the infrastructure in the United States. And since I'm not doing that, the government basically says, well, look, if you're making money outside of the country and you're not living in the country, then we're going to give you the ability to exempt up to a certain amount of that global taxable consequence that we would normally tax if you were, let's say, working a W-2 job and then lived somewhere, or if you lived in the United States and made money. So that's a beautiful thing because I'm now not having to pay income on almost $10,000 worth of personal income that's sent to me on a monthly basis. So with that, of course, you can live an amazing life in pretty much any country around the world, and you can enjoy tax-free status of that income. And also, your business still operates and manages your properties, deducting or even exempting a majority of the income that it also produces against all of the write-off benefits that it generates through the year. So these are the loopholes that you want to take advantage of because they're written in the records so that the rich and more intelligent, educated folks will take advantage of those loopholes. So one thing that a lot of people do is they set up a trust, and then that trust has a certified trustee that owns the offshore holding company that you have the employment agreement with, and that shows that technically you're not even the owner of that LLC. So that's also really, really nice because you can essentially remove yourself entirely from ownership of the LLC, which makes it pure. And when I mean pure, what I mean is that you are paying yourself through a business that you actually don't have any ownership rights in. Your trust does, but then your trust is owned by a certified trustee, and that trustee is managed by you, just you on paper are not the owner. So that's also a really great way to do it. And if you want to learn more about trust, I'll share a video right here at the top so that you can learn more about how to structure a trust offshore and what the benefits of those trusts are for you. So hopefully you enjoyed this video, and if you did, please share it with a friend or drop a quick like or a comment if you have any questions, and I'll share more info with you and help you learn more about these tax strategies to enhance your financials. All right, I will see you soon.